If you found this video helpful, please like, share, and subscribe for latest upcoming videos.
Good afternoon, ladies and gentlemen. I am Ganesh Ankarnawar, the moderator for today's earnings call. I welcome and thank you each one of you for joining us today for the Punjab and Sindh Bank's earnings call for Q1 FY26. Please note that this conference is being recorded. All the participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the opening remarks by the management. Should you need any assistance during the conference call, please raise your hand on the WebEx panel or press *3# on your phone. I repeat, should you need any assistance during the conference call, please raise your hand on the WebEx panel or press *3# on your phone. I would now like to introduce the management of Punjab and Sindh Bank. We have with us today Shri Swaroop Kumar Saha, Managing Director and Chief Executive Officer, Shri Ravi Mehra, Executive Director, Shri Rajiva, Executive Director, and Shri Arnab Goswami, Chief Financial Officer. I would now like to hand over the conference to Shri Swaroop Kumar Saha, sir, MD and CEO of Punjab and Sindh Bank, for the opening remarks, after which we will have the forum open for the interactive Q&A session. Thank you, and over to you, sir.
Thank you, Mr. Ganesh. Good afternoon, and I welcome all the participants for this Q1 ConCall of Punjab and Sindh Bank, which was declared in its board meeting on 19th July. The presentation has already been uploaded. I am very sure most of you must have been able to go through the presentation and the key highlights of our bank's performance. But I'll just set the context. I'll just mention a few of the salient features of the Q1 results of the bank. The bank's total business grew by 10.94% and stood at 2,31,132 crores, which comprised of business growth of 8.78%, and the total deposits was 1,31,182 crores, and the advances were just approximately 1 lakh crore, showing a growth of 13.92%. The focus of the bank continues to be on RAM advances. So our RAM advances grew at 17.18%, out of which the retail credit grew at 29%. In terms of the profitability numbers, the operating profit for the quarter increased by 70.35% and stood at 540 crores for the Q1. The net profit also showed a significant improvement for the quarter, and it increased by 47.80%, and for the quarter the figure was 269 crore. In terms of asset quality, the gross NPA has been reduced further sequentially to 3.34%. The net NPA also was reduced sequentially to 0.91%. The slippage ratio was at a very moderate level of 0.21%. The provision coverage ratio of the bank continues to show sequential increase, and it stood at 91.77%, and the bank was well capitalized at 17.90%. The CD ratio of the bank stood at 76.19. In terms of the deposits, we all know that the banking system is undergoing challenges on deposit mobilization on the CASA front particularly, and our CASA grew at 5.24% YOY. However, the retail term deposits of the bank is showing considerable traction, and it sequentially grew by 5.18%, and on a YOY basis it grew at 11.43%. The RAM share marginally dipped in terms of percentage, and in view of the corporate group book lending growing at more than 10.31%. However, this is a temporary blip, and I think we will be in line with the overall guidance of having 56 to 57% RAM by the end of the financial year. In terms of the other numbers that we have, the recovery has been robust for us. The bank's recovery continues to be robust, and we expect that this traction will continue. The core fee income has also grown by 18.03%. We are showing good traction in the core fee income. We are stressing quite significantly in our other third-party income and other commission-based income. The Treasury also has done significantly well in the current quarter, and the Treasury profit for the quarter was 208 crores. That also boosted our operating profits and net profits. The slippages continue to be on the downward side trend. In fact, the slippage ratio of 0.21, if you see the continues to show downward trend in the quarterly slippages, and the slippage ratio has been contained. And many of the capital, as we already said, the capital adequacy ratio was at 17.90. We are 17.90, which is a healthy capital. In terms of the expansion of the bank's network and delivery channel, we are expanding, and we have created 4 new zonal offices in this quarter, in Q1 quarter, at Agra, Moga, Patna, Varanasi. We also have a plan of opening more than 200 branches in the current financial year. We'll be also expanding our BC network. We have 2,282 BCs. We expect to increase it to at least 4,000 by the end of the year. And the branch expansion will be primarily in the southern part, central, eastern, northeastern, and the western part of the country. In various new initiatives have been launched during this period, which have been highlighted in the bank's presentation. And I think we can, and of course, on the digital lending side, we have taken a lot of new initiatives of, we already had declared that we had taken digital housing and digital vehicle loan. Now we have also introduced the digital ACC, the digital MSME loans, which we have started with 25 lakhs. We intend to take it to 1 crore very shortly, within 2 to 3 months' time. Various value new added products have been launched, both on the liability and on the asset side. And yeah, so that's all from my side. I'll be happy to take the questions.
Thank you, sir. We will now begin the question and answer session. Ladies and gentlemen, we will wait for a moment while the question queue assembles. I request the participants to limit their questions to 2 per person, and please rejoin the queue for any additional questions. Anyone who wishes to ask question may raise their hand by clicking on the raised hand icon on your WebEx panel. For those who have joined us via audio call and wish to ask question, please press *3#. If anyone is having connectivity or audio issues, you may share your question on WhatsApp to us at 77386 88746. I repeat, if anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 77386 88746. Before asking the question, I request you to please introduce yourself and your organization. So, first question is from the bottom line of Ashok Ajmera. Over to you, sir.
Good evening, sirs.
Good evening. Good evening,
Raviji
Mr.
and Raju ji. Sir, of course, the June quarter has been a little difficult quarter for, I think, entire banking sector. It's a little bit of slowdown is there. But in our, if you look at the profitability, our operating profit, because if we, when we compare the numbers, we mostly compare with the last quarter, because in the corresponding quarter, the 1 year has already gone, and in between a lot of development has taken place. So the operating profit has gone down from 816 crore to 540 crore. Similarly, hello, can you?
Yeah, we can hear you. We can hear you. Please carry on.
Similarly, sir, corresponding, I mean, consequentially, the net profit has also gone down. The profit after tax also has gone down. And even the business growth, though there is a little growth in the advances of 0.35% in this quarter, but out of them, I think 533 crores are the purchased or acquired accounts. So in real sense, there is no credit growth at all in this quarter. Rather, I would say you have just maintained it. And similarly, sir, if you look at the SMA numbers, the SMA 2 has increased from 120 crore to 558 crores, which also is a little bit of a cause of concern. And the recovery from written off account has also gone down substantially if you compare with the last quarter, from 369 crore to only 109 crores. And real recovery and upgradation has also gone substantially down to 350 crore from 891 crore. One more observation is, sir, our AAA advances have gone down from 7,400 to 6,400, almost 1,000 crore, 950 crores. And almost similar amount or 500 crore out of that is increased in AA. Is it because of rating downgrade of those companies, or there have been a change in the composition of our credit? These are some of these things, and I would also like to know about this MTNL account. I think we have got about 184-85 crore of outstanding. So how much has already been provided for because it became NPA? These are the first question. These are the few questions, sir.
Yeah. Thank you, Mr. Ajmera, for your questions. I'll try to answer them one by one. First of all, we all know that we work in a financial ecosystem where the first quarter has its own share of challenges, and is normally a quarter where we are show slowdown. That's a historic way of looking into things. And when we look into profitability, I think, from my experience, what I have gathered over the last so many years is that normally when we look into the operating profit numbers, we look it into a YOY basis, because profitability is with the business growth, and as the business grows overall from quarter on quarter, the profitability comes back into the system. So we should appreciate that the bank has shown, in spite of the slowdown that is happening, that a 70% growth in operating profit, I think, is a significant number that we can all highlight. And also the net profit numbers, which has gone up by 47%. Now, of course, in terms of the actual understanding of things, in terms of the Q4, when most of the things crystallized, one of a big chunky recovery had happened in Q4, which also helped the numbers of Q4. So these things happen when the bank progresses during the year, and many of the resolutions of credit growth comes back slowly and slowly. In terms of the business growth, we again we like to tell that the business growth has shown we are not growing in double digits. Again, it's a YOY growth. We are nearly touched 11%. We intend to continue with this growth. And as we have seen in the current context, credit growth is muted overall in the entire financial ecosystem of various reasons, which you are all aware of. In spite of that, we have been able to maintain a YOY growth and maintain the growth, maintain the numbers as of Q4, which we will take it forward. In terms of SMA2, one of the basic reason was one of the state government, we have mentioned in the presentation also. The rise is due to one of the state government guaranteed account, which has moved to SMA2, but it's a state government guaranteed account, and it's off and on it comes to standard and SMA category. So as of now, we don't feel any big threat from that account. Recovering write-off accounts, you have mentioned sequentially, it has gone down. Yes, I have told you that overall in the Q4 there was one chunky recovery from the NARCL transaction, which helped the recovery in Q4. We continue to keep a guidance of having a healthy recovery and upgradation for the current year. Similarly, the same logic goes for the recovery upgradation. What we should appreciate is that we have been able to maintain what the sequential point, which I like to tell you, is that in terms of asset quality, we continue to maintain a sequential improvement both in gross and net NPA, and that doesn't include any write-off during the quarter. So I think the point needs to be appreciated also, that when we talk of sequential improvements or sequential deterioration, this point also needs to be kept in mind. In terms of the AAA, there's nothing to be worried about. It is fundamentally because we all know that the income is also very important for the bank. We have been talking to the analysts and investors that how we will be rejigging our portfolio between the AAAs, A's, and the AA's, and this is exactly what we find, that in the AAAs we will be able, the pricing war that is going on in the ecosystem, we get a better bargain in AA. Ultimately, profitability, if you are looking out, you will be appreciate that the profitability comes from the A's and the AA's. While the asset quality is important, we will also like to see that how we maintain our margins, and that's why we are rejigging our portfolio and moving towards AA's and A's, which gives us a better pricing margin. And MTNL, the exposure that we have around 180 crores of exposure. It was fully provided out already in September 24 itself.
Fully provided. Sir, no, thanks for all this clarification, and definitely I agree that the positive things are there also. The asset quality has a little bit improved, and yes, you have compulsions of the June quarter being a very slow quarter, especially this year. It has been witnessed in some other banks also. Having said that, sir, then we can visit the targets or the guidance for FY26. Like you have given the credit growth, advances growth of 15-16%, deposit growth of 8 to 10%, and so whether now in the remaining 3 quarters or say 8.5 months, achieving this 15 to 16% credit growth is still, I mean, the target is still intact.
Yes, it is.
Similarly, for the recovery upgrade, the 1,000 crore recovery and upgrade. So all those guidance which are given for FY26 remains intact.
Yes, Mr. Ajmera, it all remains intact, and we are very confident we will achieve them.
Sir, now coming to this rate cuts and the impact of that. So what is the composition of our book in EBLR and MCLR, and is there any other like small fixed rate? And how much of this has been, both sides, income side and expenses side, has already been factored in, and the remaining load is still there of the
Yes.
Revising the MCLR.
As far as the data point that you are asking for, we have 46% of our book in the EBLR component. So that remains, and we have also we have started in a short way in the MCLR cut, but that is very not significant at this point of time. We still have sufficient room to work on it slowly. Therefore, you see, that is what exactly I have been also telling in my past interactions with all of you,
Yes.
is that we knew about this situation would come of 3 quarters ahead before. And when we were going into the market to raise capital, whether it was bonds, whether it was equity, we were telling that how we are going to combat this threat of on the margins due a possible rate cut, and we were contemplating also a 100 bips cut quite early. So we have been able to re-strategize our book, and that's how the concept of moving towards the AA's and the A's came in. That's how the concept of increasing more and more increasing the advances in the high-yielding assets like gold loan, personal loan, educational loan, agricultural loan. So those are the strategic thinking that we have already put in place, and this will play out slowly and slowly. We all know as the deposit, we have also repriced our deposit products now. We have cut our deposit rates in savings. We have cut our deposit rates in our the fixed deposit, retail term deposits. We have brought them considerably down, and that's how our cost of deposit has also gone down. And we feel that these things will this will play off in the next 2-3 quarters. Of course, there will be a impact on the margins even immediately. For the next 2 quarters, it will continue to happen. And after that, maybe from the Q4 quarter, when things even out in a much better form, and when the growth comes back in the last 2 quarters to the level which we expect, the margins will get mitigated. The threat of the margins will get mitigated in that aspect.
So does it mean, sir, that with the future 2 rate cuts are expected of 25 bips, 25 bips means about 50 bips more, and still some of this have to be factored in the previous ones. Uh, what kind of a NIM on annualized basis for FY26 can we expect? Can we go back to that 2.71, 2.78, or we will remain at 2.5, 2.4, sir?
It's a too early call at this point of time. Maybe we'll observe for one more quarter. But in terms of our aspiration, I would like to say is that we would like to reach that level, whatever number you just said. But to tell it exactly whether we will reach or not, I think I'll be in a better position when I interact with you after the Q2 results.
All right, sir. If I get some time again, I'll come back again. Let others have the chance, sir.
Thank you. Thank you, Mr.
Thank you, and all the best.
Thank you.
Thank you. We will now move on to the next question, which is from the line of Sunil Choksi. Over to you, sir.
Good afternoon, Mr. Choksi.
Hello.
Are you there? Mr. Choksi, are you there?
Hello.
Hello, can you hear me?
Yeah, I can hear you now. Yeah, please go ahead.
I think my call was muted. Sir,
Okay.
you raised equity and you raised infrastructure bond. You have strategized the bank to transition in the low interest rate regime. First is, can I know what kind of initiatives we've done in the bank in terms of product, co-lending, how to increase RAM, what strategies have we done to increase our TAT on visibility, because our RAM is at 57, 58, corporate is at 42. The thing is that to improve yield and specifically our visibility on a sustainable basis, on a quarter-on-quarter basis, rather than a rush at the month ends only, what have we done that the bank would be visible in terms of client size, whether it's corporate or retail?
Yeah, thank you for the question. I know this is a very important question that you've raised in terms of our raising of funds from the market. So the bank has taken various initiatives to rebrand our liability and asset products. Some of them are indicated in the presentation. I'll not go through them, but the point is that innovation is important to be in the market. So therefore, we have been able to now customize various liability products, both from the savings and the current side, and also trying to reach out to the customers so that we don't miss out on the retail liability base. We know that the CASA is a challenge, and that's a challenge all the banks are themselves facing. And you will find that in terms of, though it's nothing very significant, but still I just make it a point of mention here, is that if you observe the degrowth in the CASA ratio of many of the banks, we have also degrown, but our degrowth was shade lesser than some of the banks which has degrown at a faster rate in the CASA ratio as such. So there is a challenge in that, but on the overall side, we feel that while that is a challenge, we have to do outreach to the customers. So we are trying to hold on with the CASA plus retail term deposit, overall portfolio. And if you see that on a sequential basis, the retail term deposit has grown by 5%. And that is quite significant in terms of the overall liability resources and this is happening because of our various initiatives that we have taken to rejig our to recustomize our salary products, our parivar accounts, our special accounts for students, special accounts for the farmers. So these things will all play out as we move forward. In terms of the lending, you raised the issue of the TAT. Yes, we have also gone into the digital mode now. 2 quarters before, we had declared that we are doing vehicle loan and housing loan, which can be sanctioned between 15 to 30 minutes. In principle, sanctions can be given to a customer even on a holiday. So now we have taken that forward, and now we are in the MSME segment also, and the agriculture segment also. MSMEs we have opened up to 25 lakhs. We just like to understand on a pilot basis. Maybe by September we'll open it up for the entire bank and take it up to 1 crore by the end of the Q3. So there again, the issue of the turnaround time would be taken care of. In terms of our products also within the asset side, we have customized lots of products, whether it is agriculture, whether it is MSME, cash flow based. We are also now venturing into a supply chain management. I think the integration is going on with our vendor, and very shortly we will be announcing. It will happen sometime in Q2. So that will again give a good range, one of the important product amongst the entire bouquet of the products. We have also tied up with various car manufacturers. We have also on the digital car loan, we have a tie-up with one of the biggest car manufacturers in the country, and which is also slowly taking traction, and we'll continue to do it with other car manufacturers also. So we are in a situation where innovation is being taken very seriously. You mentioned about co-lending. Yes, we are already having a portfolio of around 3,000 crores plus in co-lending amongst the various NBFC partners. We are looking into it by expanding, and we have taken a call that we will be increasing this portfolio quite significantly in the next 2-3 quarters. Our various as of now, the experience of the co-lending both in the retail and the MSMEs are excellent. We don't foresee any challenges. We think we have a lot of room where we can increase it further and get a better pricing on those products. So overall, on the initiatives that we have taken, we think that we will be able to manage the expectations of all the stakeholders.
So in the co-lending, how many partnerships have done for 3,000 crores, and how many partnerships are visualized over a period of this year in next 9 months?
Mr. Mehra will answer that.
Good afternoon, sir. Ravi Mehra this side. Sir, we
Yes,
have around
Ravi ji.
12 partners in the present scenario for co-lending, and we are expecting to add around 8 to 10 more partners going forward.
Can we assume that this 3,000 crore book can be heading towards 10,000 crore by March end?
May not be that that number may not be there, but definitely substantial increase will be there.
And are we working with approximately 9% yield on co-lending?
Yes.
Yeah.
Okay. Second thing, sir, you have rolled out all the digital products where consumer finance, whether it's car, home loan, as you said it. Every quarter, we see DLF and some of the large developers in Delhi NCR selling 1,000 crores worth of flats. When you look at luxury car market, there's no better market than Delhi and NCR or Northern India, even better than Bombay. In such scenario, what kind of market share we are likely to target where home loans are concerned or car market is concerned? Third is we are one of the unique banks among peer who do second-hand car financing via NBFC or directly. Are we likely to target some high-yielding portfolio where the second-hand cars are concerned?
Yeah, Ravi Mehra this side, sir. Actually, with regard to the vehicle loan portfolio, we have grown by approximately 40% YOY if you see the numbers. And more important, just want to add what MD sir was saying, that the digital journey for retail loans, particularly towards the home loan or vehicle loan, just in the last 6 months, when we started in December, we have added around 10,000 customers, onboarded 10,000 customers of home loan, vehicle loan through digital journey. Approximately 1,500 crore rupees was the amount of loan that was sanctioned to them. Going forward, definitely we are into this second-hand car loan, vehicle loan as well. and we'll be tying up with the major dealers for this. And we're also bringing up more products into digital spectrum like gold loan, personal loan, and other things as well. So definitely our market share for at least vehicle loan is going to increase substantially.
Sir, where NCR and Delhi housing market is concerned, which can be like a 5,000, 10,000 pocket for you in a year for this 10, 20 crore flats. What kind of tie-ups have we done for that?
Sorry? Yeah,
For
definitely.
the
We are in the
larger
process of,
houses.
Chokshi sir, we are in the process of approving housing projects in Noida, Gurgaon, and other areas as well for Delhi NCR.
No,
And
I'm
once
not
the
talking.
projects
I'm
are
not
approved,
talking about. Sir, I'm not asking from a financing, construction finance, but are we having a builder tie-up that the home loans also come to us as first?
that's what I'm saying. That's what I'm saying, sir. Builder types are also being increased, and we can say that housing societies, wherever the already constructed flats are there, we're also tying up with them, and particularly in Noida and Gurgaon because major market share is there. And definitely going forward, maybe within the next 2 quarters, you'll see the results in this.
In co-lending, if I assume, let's say we are a 10,000 crore portfolio over a period of 3 quarters, 4 quarters, 5 quarters, what would be the mix between gold loan, LAP, MSME or housing?
As of now, my gold loan out of this, my total co-lending portfolio, 50% is housing and 50% is LAP, that is MSME. I don't have as of now that gold loan portfolio. Once we adopt that platform for co-lending, because for gold loan we need to have some platform for this. So definitely you can say if you target the number of 10,000 crore rupees, maybe home loans will be somewhere around 4,000, 5,000 crore rupees, and MSME 4,000, gold loan will be 2,000 crore rupees.
So right now co-lending will be via a platform soon, but
Yeah.
sooner or later will we integrate the same with our core banking solution too?
Yes, sir. Yes, sir.
Is in a very advanced stage.
Very advanced stage.
But
Very
they
shortly will
wanted
be
to
live.
be done.
Very shortly will be live.
But that is a app based, so not a core banking solution.
No, basically platform based is that the account gets opened automatically in the system.
I get your point. I get your point. Sir,
Yeah.
now understanding where treasury is concerned, Swaroop sir, you've been quite handy where the subject was concerned. I yesterday on one other peer bank call, the ED in charge said that he sees repo at 5% by March end and 10-year GSEC below 6. What is your view first on the outlook of the treasury?
Yeah, I'm not an astrologer, first of all, so I don't know. But I can still, personal, my view is this, that in view of the market situation, I still feel that a room is being created for a further cut between 25 to 50 bips. But my own personal perspective, I feel that this should evolve post December.
Yeah, second half. I mean, in last quarter, if it comes through, what would be our treasury gains and how are we positioned to garner? Because you are visualizing at a personal level or a bank level, how are we visualizing our treasury operations to function by March end?
Yeah, fine. So you see my Q1 numbers. If you see, we did my treasury department did pretty well at 208 crores of treasury that we have, and that was the result of the movement that has happened over the last 1.25 quarters. Going forward, we feel that of course there has been a post April the announcement, the yields moved in a bit in the wrong direction. But if we see that, if what I just told you, what has happened, if it happens the way I've envisaged it, I think we'll have a sufficient good traction in our treasury income. We're all prepared for that, and we're all prepared for waiting for the opportune moment to encash on the movement that can happen. But the significant, if it is of any significance, contribution, I think it will be post Q3 and maybe Q4, not before that.
Are we taking some benefit out of corporate bond market because of the treasury benefit advantage what we are getting today?
Yeah, we are, as per our appetite, we work on the bond market also.
Okay. So the next question is, India is in a transformation journey that whether it's the present government or some corporates who are leading to a large manufacturing base coming in India, be it Apple or the Korean shipbuilding yards or GCC centers, which can be a big employment, and Delhi NCR figures in that list because of certain positivity. Similar is like Bangalore and other educational hubs. What kind of capabilities are we creating when transformation of India is happening and PSB wants to transform? How would we capture whether it's a customer at a consumer level or such manufacturing destinations which are emerging in India?
Yeah. See, we as we go through our own transformation journeys on our products, we have also created a, a strategic, a pan-India strategy for a pan-India strategy for how we will tackle this expectation. So there are manifold. I don't know whether I have the time to speak on the entire thing today, but just in a brief, I would like you to tell. I like you to tell you is that suppose one of the biggest things that we are doing is we are spreading our mid corporate branches far and wide. Yesterday I was in Trivandrum designating a branch in that branch as a NRI branch. Before 2 months before that, I was in Thrissur in same belt, opening a branch and trying to capture the business in the state of Kerala. So down south we have a lot of focus. We have created various branches across the country where we find whether it is Bangalore, whether it's Hyderabad, Vijayawada, Orissa, Bhubaneswar, Chhattisgarh, Raipur, Mumbai, Thane, Nasik, Nagpur. Everywhere where we look into, we have created specialized branches, whether it is an MSME potential area through cluster-based approach or a mid-corporate branch through the manufacturing hubs that are prevalent in those areas. So we have created those branches. We have posted senior people, skill force and files in these branches where we were not there hitherto because we were not there in those areas significantly. So, and 200 branches out of the 200 odd branches that we have planned, more than 160 branches would be in these areas which I just mentioned. So a lot of focus will be on this branch expansion, and according to that, those as we move along with the branch expansion initiative, we'll be able to cater to the requirements of the localized business there. We have also done a tie-up with the Warehouse Development Regulatory Authority for the financing warehouse receipts. That's a traction. That's an area like Bhopal and Nagpur has a lot of potential there. Something in the north. We have also created. Uh, uh, the bank has also thought about in the agriculture segment in the food and agro processing. So there again we are giving focus on food and agro processing units, cash flow based lending for the MSMEs, and so it's a manifold increase, creating new zones that again gives a lot of impetus to the local administration. I mean, in terms of bank administration, zonal offices, to develop much more deeper into the unpenetrated markets. So now we have at Moga, we have Agra, we have Varanasi, we have Patna. We are looking forward, which is still an aspiration, but we're looking forward for Bhubaneswar, Bangalore, and Raipur. So these will be our three areas of focus in the next 1 year or 18 months or so. So we are creating, and as we move along, we will be able to tell you what we are doing.
Sir, my next question is what is unavailed credit and what is the credit sanction pipeline looking for the quarter?
Chokti Sahab is somewhere around 7,000 crore rupees going forward.
Unavailed credit or the new
unavailed and sanctioned both.
And what is the credit pipeline? What is in the system looking like?
Credit pipeline will be somewhere around.
So what you know that these we are reading every day the stress, not the stress, the challenges of credit growth, and we will, and in terms of the liquidity that is happening, many of the big corporates are still going to the market for raising bonds and not availing limits from the banks. They're sitting on a lot of cash. So availment of from the corporate segments is a challenge which we have to face. In fact, in view of the huge liquidity that is in the system, the alternative modes of funding is available to the corporates, and they are resorting to having them. So, but we still get in terms of the sectoral areas of where we look into, we are looking into the refinancing of whether it is real estate, whether it is road projects, renewables, segments under the PLI segments. So it is some manufacturing units. So the overall demand is muted, but within that muted demand, we feel that we are working very cautiously and trying to build up our portfolio. But the demand, of course, is muted.
Thank you, sir. I request all the participants to kindly limit their questions to two and rejoin the queue for follow-up question. We will now move on to the next question, which is from the line of Riyan Sayed. Over to you, sir.
Good afternoon, sir. Sir, I have some of the questions that I have incorporated in the chat box. If you can, because there is some kind of a network issue on my side. Just can you read and just answer to them if you can?
I'll read out the question.
Sure, sir. Thank you.
The first question on behalf of Riyan Sayed. Can you share updates on the progress and traction of the PSB UNIC app and the recent WhatsApp banking integration? Over to you, sir.
Yeah, we are focusing on the digital journeys. Our digital transactions has crossed 90% overall, and therefore there's a lot of traction. The registrations have also started increasing. Our active users are over 10 lakhs now. So we are giving a lot of focus on the digital journeys. WhatsApp banking is also it is live, and I think we are also getting good traction on how the customers are interacting on the WhatsApp. In terms of the CASA ratio, I can read the questions now. I think we have already answered that question in our form. CASA ratio dropped to 30.6%. Other initially, yes, we have taken a lot of initiatives, customizing our products, asset liability products. We have strengthened our app to market CASA mobile app. We have also good salary account packages. Our teams are on the ground, whether it is the defense account, whether it is teachers' accounts, whether it is municipal corporation accounts, whether it is administrative office, civil servants accounts. We have good traction there, and we are getting good results. Ultimately, it is how we do outreach for the CASA and retail products. In terms of the infrastructure book, there is no conscious de-risking strategy. It is just that the first quarter normally is a slow quarter in terms of infrastructure business. We are in the process of, we have a lot of in principle sanctions and unavailed sanctions on the infrastructure, roads particularly, and renewables. So there is no conscious decision of de-risking the strategy, but it is just a slower offtake. As I said, that there is a muted demand in the market. And in terms of the name that you said, asked that one of games, are there any similar items included that investors should be aware? No, there is no such similar item for Q1.
Thank you, sir. We will now move on to the next question, which is from the line of Nikhil Thakur. Over to you, sir.
What was the slippage ratio for Q1 FY26? And is the bank on track to maintain full year slippages below 1.25%? And my second question is, post QIP, what is the CRR and CET1 level in Q1? And do you foresee any need for further capital raising in FY26?
If I heard, there was some disturbance on the audio, but if I can understand the principal question that you are asking. In terms of the slippage ratio, as I said, it is at 0.21 for the quarter. The overall slippage ratio has sequentially moved downward. It is on a downward trend, on a positive trend.
Okay.
In terms of just if I see the YOY numbers, in March 24 quarter, the slippage ratio was 0.47. And if you go through it quarter on quarter from June, then September, December, March, and again June here, we have reached a level of 0.21. So we expect that the slippage ratio will be, our guidance on the slippage ratio, we will be able to attain our guidance on the slippage ratio. And the annualized is 0.84 at this point of time, and we will be able to meet that target. In terms of the other question on capital, the capital adequacy ratio stood at 17.90 post the raising of the capital, and the CET1 was at 16.02. I just missed that part of the question. If I've answered it correctly, please let me know, or I can take a follow-up question if I have not answered it properly.
Thank you, sir. We will now move on to the next question, which is from the line of Bhavik Shah. Over to you, sir. Hello, Mr. Bhavik. Hello.
Good evening, Mr.
Hello.
Bhavik.
We will continue to the move on to the next question, which is from MB Mahesh. Over to you, sir.
Hi, just two questions, which is on slide number 12. If you could just kind of give us an understanding on this reduction in cost of deposits from 5.74 to 5.66, what would be the contribution of term deposits versus any reduction in SA for the quarter?
The deposit, as I said during my submission of some previous questions, we were foreseeing the possible rate cuts maybe 2, 3, 4 months ago, and we were conscious of when at what time we should reduce our deposit products. So we were in an early movement. Our bank has moved early in terms of the reduction of the. So first of all, we reduced the savings, then we reduced our retail term deposits. Some of the flagship deposit products that we had, which we were providing was at the range of 7.45% also. We brought it down to 7.25, and now we have brought it down to 6.90. So that is a gradual reduction we have done, and that's how this is impacting. This has positively impacted the reduction in the cost. And we also have shed a bit of bulk deposits, and that also has evened out during this quarter. So overall, our deposit cost has come down.
Sorry, if you can you just kind of give us numbers as to what was the average CASA rate or SA rate for last quarter and this quarter, and what was it on the term deposit side for last quarter and this quarter?
In terms of interest rates or in terms of the volume?
Yeah, in terms of what is the portfolio carrying at the savings rate, and
savings
what is the
is
portfolio
at 35,000 crores. So you want the average carrying
interest
rate cost?
Average
That
carrying
my
rate,
team will be able to tell you. I don't have it at this point of time, but I'm giving you a range. Our savings deposit rate is now at 2.5%, and our retail term deposit is at 6.90, the highest rate that we have. We can share with you separately.
That will be slabs, right? It's not the
Yeah, we have
portfolio
slab
yield.
wise. Yes, we have slab wise. That my CRO will be able to. I'll tell my CFO to share with you separately. Yeah.
Perfect. And second question is this same slide. Your yields have declined from 8.63 to 8.47. By the end of this quarter, this 8.47 goes where? Based on the current decline in yields.
Quarter, this Q2?
Yeah, in Q2.
Yeah, this will move in the reverse direction now. Means the positive.
Yeah, but in the sense, what is the quantum that you are expecting this to be?
As I said, that this is very in terms of quantifying the number. It's very dynamic now in the market. So we have to see very careful in how we pace ourselves in this. But the bottom line, which would be important for all of us to understand, is that this will have an uptick as my advances grow, and as my advances on my MCLR linked loans also grows. This will continue to move in the positive direction. At what point, maybe I'll be able to tell you as I talk in another reply to another question a few moments earlier. Maybe a much more firm figure I can quote after Q2. But as of now, I can say it will move on the upward trend.
Okay, just one question. This 2.52 net interest margin, till where are you comfortable that it declines before you need to start taking far more serious action on the deposit side?
Yeah, I think at this point, this is the low level where we are. We have been below this also. Now I think this is the optimum level where we think if anything it doesn't work out, we'll take further action. But I don't think at this point we are in that situation.
Okay, done. Thank you.
Thank you, sir. We will now move on to the next question, which is from the line of Bhavik Shah. Over to you, sir.
Hello. Hey. Hi. Apologies, there was some technical error earlier. Just two questions. One was on movement of SMA 1 and 2 book. So last quarter, we had SMA 1 of 623 crores and SMA 2 of 120 crores. This quarter, we have SMA 1 and 2 of 572 and 558 crores. So I understand there would be two lumpy accounts. One would have moved from SMA 1 to 2, and second, as in, would have come into SMA 1.
Yeah.
Any broad color of what these accounts are, what's happening there?
One is already mentioned. We have already made it clear in the presentation.
Yeah, it just says one corporate account. Any other color would be really helpful. Which sector and any nature of what's happening there.
We all know all the names are in the public domain.
Okay. And sir, just want to check on NBFC. Is there demand? How are you catering to demand? What are the incremental yields you are charging?
There is demand. Yes. NBFCs are always their demand will always be there. We also have a lot of demand, and we will be pricing our product and our exposure. We are already at 14% odd. I think we like to keep it at that level, but there is a lot of scope for churning within the NBFC exposure that we have. But to answer to your question pointedly is that yes, there is demand.
So, as we are running out of time, we can take one last question. So we will move on to the next question, which is from the line of Ashok Ashmila. Over to you, sir.
Hello. Can you hear me, sir?
Yeah. Please carry on.
Sir, I have just one some observation and discussion on with this RBI relaxation on taking the collateral from the farmers for the agriculturists for the lower loan amount of below 2 lakhs to take collateral gold. So that becomes now little easier for the banks to lend money, small loan amounts. So have we prepared any kind of our plans on that to increase our agri loan portfolio?
Yes, we have. Yes, that is a positive development for the banks, and we will be taking full advantage of it.
And any kind of like some numbers or something that in the coming quarter or two, how much money can we disperse or can can we lend
We
because
are
of this?
yes. With the guideline has just come. It is, I think, we are working on exactly what is a portfolio we can build on this. The color will be shown after Q2.
Okay. Sir, as regards our MSME loan book or even little bit of corporate, what kind of inquiries we are having? I mean, from where this requirement is coming, and what is the status of our already sanctioned book or sanctions in pipeline? Any number can be given on that so that we can have some idea about this achieving 14-15% of the target, that which are the segments from where the demand is coming?
Yes, sir. Ravi, Mehra this side. Sir, with regard to the pipeline, definitely, as I told, somewhere around 7,000 crore rupees of pipeline is there, sanctioned and unavailed. And the segments in MSME, you can say cluster-wise segment, we are also looking at specialized trading and this manufacturing as well, specialized sectors like sports in Punjab, hosiery. And with regard to the corporate, yes, MD sir told that infrastructure, road development, and this renewable energy, that is going to be our main focus. And
So,
LRD
sir,
as well. LRD as well.
this renewable energy like solar, as per our experience, there is a lot of demand because the overall basic capacity for the basic thing like the cell capacity is also increasing. PV module capacity manufacturing is also increasing. So downstream, there is a lot of opportunity in this particular segment, which even in our own experience in our own office, I mean, there are a lot of such inquiries in the proposals. So as a bank, I think we also must be focusing on this because there is a lot of scope in renewable energy, and the loan amount like can vary from small 1 megawatt to so maybe around 3 crore rupees to maybe 20-25 crore for those small, and many of them are under the government schemes also. Like in Maharashtra there is a Kusum a scheme where a lot of such projects are being put up. People are getting the contracts for 5 megawatt, 10 megawatts, 20, 30, 40. Similarly, in Rajasthan also there is a lot of scope. We know a few parties like they are getting from Rajasthan government to set up the cluster based renewable energy plant. So I think we should focus on those kind of projects where even the government is involved, PPAs are signed, and there is good opportunity there, sir.
Yes, sir. Yes, definitely, sir.
You're right. You're absolutely right, Mr. Ajmera.
Thank you, sir. We will now conclude this conference. So, should you have any further queries, please reach out to Mr. Ganesh Shankarnawar at 77386 or ganesh@conceptpr.com. Details are mentioned in the WebEx chat and the analyst invitation sent to you earlier. On behalf of Punjab and Sindh Bank, I thank each one of you for joining the conference today. You may now disconnect your lines. Thank you. Have a good day ahead.
If you found this video helpful, please like, share, and subscribe for latest upcoming videos.